for the month of October, and the total sales have come in at 1.38 lakh units. So let's try and understand exactly what's happening with the demand as well as the supply and production related topics. We have with us Shashank Srivastava, Senior ED, Marketing and Sales at Maruti Suzuki India, joining in on the show right now. Shashank, hi, good afternoon. Great to have you on the show. Help us understand, Shashank, how is it that the sentiment is different, or is it at all from this Diwali to the previous years in terms of what you're seeing with demand and the purchase trends?
Yeah, so last October, the Diwali time last year was a record sales. In fact, it was the highest ever wholesale and retail in the industry in any month ever. So that was last year. But this year, while on the demand parameters, we can see that on the enquiry side or the booking side, been pretty good. Side there has been an issue, as you know, largely because of the semiconductor shortage, with the result that the estimates today for the industry in the passenger vehicle segment is that it will be around 261,000 units as against 334,000 units last year. So there's a drop of about 22%. So also demand parameters seem strong. Supply side, I think the issues, and that is also the resulting in the larger waiting periods across all models for most of the OEMs.
Shashank, since you touched upon the elephant in the room, let's address that and let's get it out of the way first. You are expecting November production to be at 85% of normal. However, going forward, I want to discuss things. And one is expecting this number to only improve on a month-on-month basis. Would it be fair to say that the worst is behind us in terms of low production, or not quite?
Yeah, so there seems to have been a progressive improvement month on month. So if you recall, in September, we had informed the stock exchange that our production will be only 40% of our planned production. In October, we said it would be around 60% of the planned production. And now we are saying it will be 85% of the planned production. So I think progressively things have got better. Personally, I believe probably we have passed the bottom part of the curve as far as supply is concerned. However, I must hasten to add that the situation as far as the semiconductor supply is concerned is still very dynamic. So while there seems to have been a good improvement in the past few weeks, we'll have to wait and watch and very carefully to see how, because the situation is quite dynamic, we have to wait and watch and see how quick this trajectory of continued improvement is in the future as well.
Shashank, it's turning out to be a little bit of a tightrope walk for you guys, right? Because on one hand, you have the semiconductor chip shortage. On the other hand, you have commodity costs as well spiraling up. How is it that you mitigate and try and balance out both for your consumers as well as your business? Are there going to be more price hikes which are going to be in the offing?
Yeah, so I think it's a great question because that's the central issue that we are facing today. So since last year, we have seen commodity prices increasing dramatically. And in fact, the precious metals like rhodium, palladium, platinum, etc., they increased almost 3.5 times their normal price. So rhodium, for example, which is used in catalyzers for BS6 vehicles, 18,000 rupees a gram became about 63,000 rupees a gram. So also steel, which is a major commodity for us. Steel was 38 rupee a kg in May of 2020. It went up to about 70 rupees. So also copper, $5,200 a ton to touch about $10,300. So yes, the commodity price increase has been very steep, and because we were coming out of the COVID situation as market leaders, we were very conscious not to compromise on the demand situation. And we kept on postponing the price hikes because that's the last option to us. We didn't want to compromise the surge back in the demand. And that is the reason why we didn't take a price hike last year. And we expected that the commodities will soften, but commodities haven't softened, and we had to take 3 price hikes this year. A 1.4% hike in January, a 1.6% in April, and 1.9% very recently in September. We haven't passed on the full increase of the material cost to our customers, largely because we have to walk that line between the bottom line and the top line. And that's a very fine line at the moment. So yes, we keep watching the situation very carefully going forward and see. There has been some softening as far as the steel price is concerned, and also the precious metals. But that's because the overall demand for that metals have come down because of the semiconductor shortage, and that's why production worldwide has been less. But if we go back to normal level of production, it's quite possible that even the precious metal prices, which have softened in recent weeks, will get back. And then, of course, it's a very, very tight situation. Yes, we are monitoring the situation, and it's still quite possible that we will have to look carefully at our profitability once again sometime.
Taking forward the conversations and exactly what Aisha was also asking you. So I'll try again. You've said the worst is behind us, but any guidance that you can give of normalization by when Maruti has figured out its supply chain? So any guidance on that front? And after 3 price hikes, any more that you will need to roll out soon?
So I just referred exactly to this question. What I said was that going forward, the situation on the semiconductor supply is not completely clear. It's quite dynamic because it's not just one or two vendors. It's the entire global supply chain which is involved, not just one OEM like Maruti Suzuki, and not just one country like India, but it's a global situation affecting all OEMs in the world. And therefore, the exact time to tell when it will normalize is still not clear. But what I believe is that it is getting better, and that is reflected in the increased production that you see in Maruti Suzuki, as well as generally speaking for other OEMs as well. On the question of the commodity price increase and whether the price hike is possible in the future, I said there is no, for that question also, there's no definite answer, except that the commodity prices continue to be high, and the recent couple of weeks where we have seen a little bit of softening hasn't really come, hasn't been drastic, and I believe it can go up again, and that is why we have said that we'll keep watching the situation. And it's a very fine line. You cannot ignore the top line and look only at the bottom line. Just by increasing prices continue to burden the consumer. On the other hand, you have to also look at the bottom line, where you need to be profitable also. So we will have to watch that situation because it's still quite volatile at the moment.
Okay, so it's quite volatile. You're hoping normalization will happen soon. But, Shashank, I have 2 more questions for you. First up, that the festive season, it's not just for Maruti, but for all automakers. And this time in particular, across the globe, it's starting to be a washout, right? So if the pent-up demand is indeed genuine, and a lot of that demand is being met by used cars, what will Maruti do once the situation is normalized to take advantage of that to rev up its sales?
Yes, so one of obvious thing is to increase production as much as possible, because remember, the good bookings and the good inquiry levels that we saw on the demand side haven't really been satiated by an equivalent retail production on the production side. And therefore, we see a large buildup of pending bookings in the industry. So industry, roughly a normal booking, which are generally pending, is about 200,000 to 250,000. I'm talking of the Indian passenger vehicle market. Currently, it is upward of 500,000. So I think it does indicate that there is a good demand in the market. However, because of the supply issues, the pending bookings have increased. Of course, it is reflected in the waiting times in the different model. And in that waiting period can be different for different models and for different fuel types. For example, for Maruti Suzuki for CNG, there is a huge waiting for time, much higher than what it is there for petrol vehicles. So there is those variation geographically by fuel type, by OEM, but generally speaking, there is waiting time which is built in. So one of the solutions, of course, is to try to increase as much as possible the production, and that's what we are focused on at the moment.
Shank, my final question to you. So much is being said right around the world now about ESG, going green. You've seen that massive deal being announced by Tata Motors with TPG. Any update that you can give us as far as Maruti's EV plans go?
Yeah, so we have announced that we will have the EV by 2025, around that time. So that is what we have announced, and we have also said that in order for EVs to be really successful and make a difference to the environment, there has to be a good volume, and we are very focused and we are studying the ecosystem which will make those large volumes possible. For example, the battery technology, which is there currently, and battery, remember, is about 50% of the EV vehicle cost. The current technology is a little expensive, making the cost of acquisition of EVs quite high. The charging infrastructure is not so great in our country. The range anxiety and consumers need to be educated about it is also something which is a cause of worry. So we need to have the ecosystem in place, and we are looking at how to make that possible so that we can the volumes which are required for good localization and hence lower price, the cost of acquisition, customer convenience, all that has to be seen, and that is what we are focused on.
Okay, so that's Maruti as far as EVs go, and of course a lot more. And the month that's gone by, sales figure. With that, Shashank, thanks so much for joining us today live in ETNOW.